we have a bit of a disaster on Wall Street. 699 points was how much the Dow went down last week. Well, it has now fallen below 11,000. It closed on a low on Monday, and it got pounded throughout the day. Now, here's the critical point you have to understand. Most of the political reporting throughout today has said that it is partly due to the S&P downgrading our credit rating. That is not at all true. Our credit rating is related to Treasury bonds. So if we have our credit rating lowered, it might actually cost us more money to borrow, which would be terrible for our deficit. But that is not what's happened. In fact, the reverse has happened. Treasuries fell from 2.57% to 2.33% in terms of the rate that we have to pay, meaning that the downgrading did not affect us at all. It went in the other direction. That is not why the stock market fell, even though you couldn't tell that if you watched President Obama or any of the Republicans reacting to what happened in the stock market today. No, the stock market fell for two different reasons. Number one, Europe is in a state of disaster. The European Central Bank came in and said, hey, you know what? Not only are we shoring up Greece, which we've already done, but now we are going to go ahead and shore up other countries, including Italy and Spain. But what wound up happening is that the markets reacted to that, saying, hey, you know what? If that's what's happening, then we're downgrading France and Germany because they might not be able to pay the bills for Italy, Spain, and Greece. So that really shook the confidence of a lot of people in the stock market. The second reason, which is huge, is about the global economy, but also specifically about the U.S. economy. Investors have lost confidence that there is enough people to buy stuff, okay? In the U.S., 70% of our GDP is consumer spending. The problem is consumers can't spend if they don't have any money. And that is the number one problem we're running into. For example, in April through June, that's the second quarter of this year, we grew at an anemic 1.3%. If you thought that was bad in the first quarter, we only grew at 0.4%. And all those numbers have now been revised down. The first half of 2011 in its entirety has been the slowest since the recession began, or since we got past the recession, when of course we were in negative growth. So the real problem is the fundamentals of the economy. There aren't enough people to buy the products that people are making. So when you hear the politicians or the political reporters talking about, oh, you know, we had this debt ceiling problem, we have this political impasse, it led to our credit rating getting downgraded, and it led to the stock market going down, that is completely and utterly wrong. No, that is a different problem. The problem we have here is that we have massive unemployment and we have an anemic growth in our economy. And by the way, that did not get addressed at all in the debt ceiling. In fact, if anything, investors are reacting to this grand plan that wound up doing nothing but hurting the employment situation. There have been estimates that because of this deal that Republicans and Democrats struck, we might lose another 1.8 million jobs. And then who would buy the stuff that these businesses produce? The only reason why corporate profits aren't in disastrous shape right now is because they're selling so much abroad and they're producing so much abroad. Hence, they don't need the U.S. economy for jobs, at least. Okay? So our fundamentals are what's the problem here. Don't let anybody tell you otherwise. You know the easiest way to support the show? Subscribe to our YouTube channel. Totally free. Press the button. Boom.
Yeah, you subscribe, and every time we upload a video, you get notified about it, so you're always in the loop.
You can see all of our videos whenever you want to. Fun for everybody.
Not only fun, it's the only way that we're able to be independent media.
And then you can say about our show,
by jumping in.
People who watch our show are very informed.
I don't know what else to say about it. Oh, there it is.